Hey, it's Ed, and the future is now, and the future is profit taking. Okay, this is the main focus of this video. Okay, a lot of people just don't know how to take profits when you should. And this is my opinion, but I mean it's worked well for me. Maybe it doesn't work well for everybody, but in general, if you don't take profits at certain times, you get stuck in bad situations. And main thing is I hate being stuck in bad situations. And I have, just to start with, I wanted to go over the markets because we talked about it in the last video when I updated Tesla when they broke out the S&P. Okay, but the market also broke out. Okay, and now the market's flagging up. You can see it's flagging up on SPY, probably the same scenario, flagging up on pretty much the same scenario on the Dow. Okay, they're both flagging out. And what are they flagging waiting for? What's the breakout? Is it the vaccine? No, it's the stimulus. The stimulus put so much money into the market that it blasted off, back in March and April. And so the same scenario, I think, is going to come into play. Now, they have basically, I think, till Sunday, this weekend, to get that ironed out. Okay, we actually cut, like I profit took Tesla around 628, 646, and cut it down, cut it down, cut it down as it kept climbing and climbing. So as it climbs, I buy, and as it climbs like higher, I end up trimming the positions. Okay, that way I don't get stuck too heavy in a downswing. So but anyway, for example, we had Tesla and Palantir SI mainly, and all of them ran up huge. I mean, we made a good score on Palantir, about 12,000, and we had maybe 1,400 shares. Now I've cut that all the way back to about 300 or 400 shares across all accounts. Same thing with SI. We had about 800 shares of that running at about 28, and it ran up to 39. Once again, we took about 25% plus profit there, and we cut back that position. Tesla ran us up 20 plus thousand, and we cut that as well. Not, I keep core shares like basically indefinitely, but in general, I wanted to profit take and wait until we get that next stimulus boost. Okay, when we get the stimulus boost, I'll be in about 90% equities at that point. I might leave 10K, or I'm sorry, 10% or 30K to 50K, basically for different moves, depending. So, but anyway, I want to cover a few stocks. So we'll start from scratch here and cover Tesla. Okay. Now, Tesla obviously ran up to about 653, and it had a big dive, but it really wasn't Tesla. It was the whole market. I mean, literally every single stock in our account, and we had like 12 or 13 different ones, everyone was in the hole. And I think we were down 8,000 that day. So, and it was like, and I had already cut. So, I mean, had I not cut, we would have been down over 20. So once again, this is why I cut as it kind of peaks out. And since we were hanging that 30,000 zone on the Dow, it was just looking slightly weak, like it wanted to reject. It wasn't Tesla. It was just in general the market. So if you think Tesla did, I mean, granted, Tesla put out the $5 billion raise. When they did the capital raise, that definitely had an impact on the selling. I mean, they were dumping those shares instantly at those prices, and it'll probably show on the forums. I haven't checked to see if there was any big selling on anything there. But anyway, so and Tesla bounced back huge the other day, and I was going to day trade it, but I was like, okay, let's just, we've done so well. I didn't want to kind of risk it, so I didn't even get back or day trade it when it dropped down. I was like, I'm just going to stay away for a little bit, try to be patient. And we had our move. We picked our move. I waited a month for that move on Tesla in the market, and we slammed it, and we made about 30%. 28, 30%, something like that. And, that was a pretty big move. And so once again, I don't want to give back 10 or 20% of that, or 50% of that move. I don't want to give up that move. We already hit our goal for the year. We just capped over 300, and that's what I was trying to do. I was just waiting for the market to break out, jump in, ride it, and then, kind of cut it down to base positions. So now we're basically 20% in equities and 80% in cash, waiting to leap onto that stimulus. Okay, I don't care if it gaps up. Let's say they do the stimulus on Sunday, it'll gap up, and who knows what'll kind of happen directly from that, but it's going to move up. So why not just wait? What if it stalls out? What's the risk? Manage the risk reward. What if it stalls? If it stalls on Sunday, like the government stalls, period, let's just say, it's a 50-50. Let's say they get it passed. I think it's probably less, maybe 40-60. And if it stalls out, that's going to have an inverse effect on the markets. And the markets could go down Monday or Tuesday, Wednesday, potentially. It could go down for 3 or 4 days. I'm not greedy to where I have to be in this weekend. So if they do push it, then it goes up. The whole point is if it goes up, it's not going to go up one day. If they push the stimulus across, it's going to go up for a week, maybe 2 weeks straight. So missing one day of gains is not a concern for me. But getting day after day, just waiting for something to happen and having it kind of slow bleed the market, I don't want to be involved in that. Okay. So anyway, I mean, the company's looking pretty strong. Net's still looking pretty strong. You can see it got hit a little bit the other day. Invitae looking pretty strong as well. Some wicks at the top that I'm not a fan of, but still. Palantir's flagging. Palantir I like the most, honestly, out of all the companies for 2021. This is my stock for 2021, in case you didn't know. This is it. This is the company that I think could go from 27 to 60 to 70, potentially. Okay, I'm looking for a 100% move on this company. Is the question of when. We've already capitalized like 100% on it already. We started buying it at 12 and 14 and making profit all the way up, made about 12,000, maybe 10,000 when it backed off. And yeah, I got hit a little bit in the back off and then added more. So basically, I think somewhere around that range of 100%, maybe 80%. I don't know exactly. I buy in and out, so I would have to totally figure it out, but somewhere around the 80%. Anyway, this is the stock that I think has got the most potential 2021. And that's the reason why. I mean, once again, I've been studying this company up a little bit more. Granted, I think they're going to sell off towards the end of the year because the lockout period is going to be up, I believe. Wow, I can't remember the date. It's either the 21st or 31st. I can't remember. But anyway, the lockup period is going to expire, which means the insiders are going to be able to sell. So obviously, I think they're going to take some serious money off the table at that point. So you can see it dip down. So I don't think I'm going to be in any of these stocks around the 27th, to about the 1st. I'll probably re-enter back in the 1st and 2nd of the year. If the market's still strong with the stimulus and everything in effect, then I'll probably get back in on the 1st. But definitely going to, make sure I take profits and everything by the end of the year. I mean, we still have... Let's see. We still have about 19 or so days, probably about 15 trading days, I would think. Anyway, so Palantir I like a lot. I can see that breaking out. SI I also like a lot. I can't wait till their next earnings report. This is another one that I don't mind holding for the 2021, really. I'll probably get in and out of it, but in general, because that's what I do. But that might not be your style, but Palantir and SI, I could hold them all 2021 and I guarantee I'm going to be higher than we are today on those. I mean, to me, that's just my opinion. This isn't financial advice. This is what we're going to do. Okay, I'm probably going to do about 50K in Palantir, 50K in SI, 50K in Net. Another one that I'm a big believer in. No, the reason being for Net, if we go back to earnings, okay. And earnings, let's see, 2320 was 19-cent loss. Earnings was 11-cent loss in May. 8-cent loss. What's the direction? What's the direction of the stock? What's the direction of the company? They're moving less and less negative. And if they go profitable in Q1, I'm sorry, Q4 or Q1, yeah, this definitely is going to be over 100. Okay, that's a 25% move. That's what I would expect on net. And you can see there's a ton of buying. Big bar green, 4 big bars green. There's a little bit of weakness back in the past in June, July, but look at the bars. Low sell off volume. All the buying volume is high. So this company also looks strong. So net Palantir SI, I'm going to be running, for next year. Whether it just depends on how much. Tesla, I'm not so sure. It really just depends. Obviously, we have Tesla longs in general, but as far as trading it, I'm probably going to trade around it. Meaning when I see it blast off for any reason and break the chart, I'm buying it in. And if I see any weakness in it, I'm going to sell it off. So I think there's a chance, and I've been watching a lot of other YouTubers. Jeremy from Financial Education just posted a video the other day where, he was talking about Tesla and how Tesla could go sideways or sideways down for 2021. And that I believe him there. I'm not 100% always in line with his way of thinking, but I just think that Tesla needs a breather. And it may be a long-term breather. I mean, I'm not saying that it can't go up to, 800 or 1,000 potentially, and, it can. But I mean, it's a risk reward. It's it's already run up over 1,000%, and I don't know. I just don't want to give back the profits that we've made. I mean, we've had such a run on Tesla. We made 100% in the first couple of months in 19 on Tesla, and we've made multiple 100% after that. So I just I don't want to give it back again. So, and it may have to backfill this massive evaluation. I mean, it's over 1,000 PE, and it's like 4P, and it's looking high, so I'm not worried of selling it at these levels. We can always get back in. That's the thing. Now, I mean, if you're dealing with taxes and everything like that, then that's a different story. Now, don't get me wrong. I was talking to Market Scraper. Actually, we were on Twitter, and he was talking about Tesla and asking questions about Tesla, and I was explaining, in my opinion, that that I was seeing that it could potentially go sideways or flatline or whatever for an entire year or even months at a time potentially. And we were talking about that, and a big part of the reason for that is hang on one second. The big part of what we were talking about, I'm kind of spacing out again because I'm getting a little bit distracted. Let me pull Tesla again. Basically, we've already priced in so much of, I would say we've priced in the Cybertruck almost. We've priced in production of the Model Y, Cybertruck, the new factories. And everybody they're having new factories. They're going to be producing more. Well, profitability-wise, I don't think it's not like they're going to go skyrocket on the profit. Now, the analysts want to see profitability, and their profit's probably going to be just basic. It's not like they're going to crank profit in the next couple of years. Now, don't get me wrong. Again, in 2030, if I had to hold one stock till 2030, it would be Tesla. Tesla is going to be worth 1 to 2 trillion, in my opinion, by 2030. So you can say, well, why not just throw it all in Tesla then and just wait till 2030? You'll make 4x. So I'll go from 300K to 1.2 million. And what I was explaining to Scraper is if I go 30% a year, I'm going to double every 2.5 years via compounding. So if I can make 30% a year, just broad on the entire portfolio, then we would go from 300 to 6 to 1.2 to 2.4 in the same time frame. So just sitting and holding Tesla doesn't make a lot of sense if it's just going more or less sideways, or even if it just creeps up. Even if it just creeps up over time, it still would not make as much money as if I make 30% a year broad portfolio, okay? On different stocks. What if I make 100% on Palantir next year, but Tesla only goes up 20%, let's say? Well, I would be missing out on that 80%, essentially. So you can see the difference. So that, I mean, that's just my personal strategy. And, you know, I'm a trader as well. So I would rather just pay the taxes every year on the gains, you know, every year. So, but that's my opinion on Tesla. It doesn't mean that Tesla's not a good stock to hold for 10 plus years. You know, I'm almost positive it's going to be worth, I mean, it's a half a trillion now. So to be worth 2 trillion, it's got to go up for 400%, right? So think about it that way. So 300 more, 4 times from where it's at now, it's going to be 2 trillion. Well, you're going to make 4 times the money. So whatever you have in a Tesla, just if you want to hold it till 2030, you'll probably make 400%, okay, over that time frame. Okay, but you're also not making 30% a year. 30% a year compounding is a lot more than 400% total. And that's what I was trying to explain to Scraper, that I wouldn't, you know, that's not my strategy personally. Like we've hit 100, I don't know, hang on a minute. We've hit, we've hit, in the 1 month, 36K. So that's how much we've run up just on this last move on Tesla, Palantir, SI, and all the other companies. So some of them have been down. And then 3 months, 33%, 78K, 122,000, 6 months, it's 65%. Year, the 1 year change, 149%. So, I mean, really 149%. If I did 149% every year for 10 years, this account will be in the tens of millions. So just holding Tesla, am I going to be in the tens of millions holding Tesla? Am I going to go up 149% every year? I guarantee that's not going to happen. So I hope that makes sense. Okay. 2 year, we're at 229%. So over 100% a year. If we're at 100% a year every year from the next 10 years, it'll go from 300 to 600, 1.2, 2.4, 4.8, you know, 10 million. I mean, you're talking, like I said, in the tens of millions. So my goal is to make 30 to 50% every year, period. Okay? My goal isn't to just hold stocks because I want to hold them because I think that they're going to be worth more in the future. My goal is to make sure that I grab onto every company that I think is going to make the move that year. You know, or if the market's doing terrible for the year, I might be shorting for the whole year. If the market's going down for 10 or 12 months, I'm going to be shorting for 10 or 12 months. I might only make 10 or 20 or 30%, you know, doing that. But I'm definitely not going to just bleed my account if the market has a correction or has a recession type scenario. And over every 10 years, it happens. You can almost bank on it every 10 years. You know, just the hit in the market earlier was a huge hit. I mean, Tesla, I don't think people remember. Tesla went from 750 to 350. It dropped like 60% in that crash in 2 weeks. So let's say, hypothetically, again, I'm not rooting for this, that's for sure, but let's just say Tesla loses 50% of its value right now, okay? 50% of its value now sends it down to $320 a share. Let's say we had 200,000 in Tesla. Well, that would put us at 100,000. You think I'm going to be willing to lose 100,000 waiting around? Not a chance. That's just not my strategy. I would not do that. I follow the charts. I follow the markets every single day. You know, every day the market's open, including weekends, I'm studying it and researching. So there's no way I would let that happen. You know, some people just, why would you ever sell Tesla? Well, I sold it at 750, or I'm sorry, 850 before the market crashed. You know, I've been buying it back, making the money coming all the way back anyway. But I just got rid of the risk. I basically just crushed the risk out of this situation. Not to mention we're making money on other companies as well. So with the diversification. So anyway, that's my opinion of things. Okay. I mean, I'm all for Tesla going up to 1,200. If it breaks back up, we're all over it. 100, 200, 300 shares, whatever. It doesn't really matter. The point is, I don't buy into weakness. I don't buy when stocks are trending down at all. I'm buying when stocks are trending up. Remember, it broke out. I was like, we had 100 shares. I'm adding another 100. Was that a good idea? Look what happened. We had 200 shares that ran up. And we made like 7,000 a day for like 4 days, 5 days in a row. We're just cranking in, we're just printing money. And then ducking out, reducing the positions as it starts to round, as the chart starts to round. And I'm not saying it's not going to head back up. It can easily. But once again, this is a strategy that you can employ. You can take advantage. If we go back to when it flagged out for 2 months straight from the split zone, remember, from the split, it was buy the hype, sell the news. We might get another buy the hype, sell the news, by the way, on the 15th or 16th when Tesla gets put on the S&P 500. That might be a sell the news scenario. Well, I'm not willing to risk that. It's about greed and risk reward, okay? And, basically when it was flagging this whole time, we were making no money on Tesla going in this. We were losing money, actually, during this flag sideways when it went from 500 all the way down to 400. Granted, we didn't have maximum positions because I was smart enough to cut it, add more at the bottom when it boosted, and taking advantage of these little dips. And then we blasted back off and we jumped on it. So you don't have to jump on the train when it's not moving. And I don't think people understand that concept. Okay? The train is not moving. Why do you want to get on? When the train starts to move, jump on it as quickly as you can. Okay? Otherwise, you're going to find yourself under the wheels. Okay? And or all of a sudden you get on it and the train stops. Okay, next exit, too early. So, the market to me is about entries and exit points. And, I am very good at that concept, okay? I understand the patterns. I see what's happening. I follow the news. I follow the companies. So I can see when something's going to happen and I understand the implications of that. We knew, I told you guys, that this wasn't going to be a buy the hype, sell the news for 1 day, 2 days. This ran up for 2 weeks straight, almost 3 weeks. It had a little pullback, but it ran up for almost 3 weeks straight. Tesla went ballistic. Now people are buying it at 650. Yeah, you're crazy. 640, 650, 630. You missed. You're getting on the train at the wrong spot. You don't want to get on the train when it's already stopped at the next exit. Okay, and now it's got to back up, let everybody off, okay? And I'm not the only one with this philosophy, okay? There's a lot of traders every day. That's how all this buying and selling is working. People are like, oh, is this too high? And they're selling, and I'm basing it on what the chart's telling me. If the chart's telling me we got to head back over to the 20-day moving average, then so be it. Where's the 20-day moving average? And this is the 20. Where's the 200? Oh my God. The 200's down all the way at $300. Well, if Tesla really pulls back, you can see it at 3 to 350. That's where it would have super strong support at the 200 moving average. If we go back, let's see what happened. Yep, boom, there it is. There's the market crash. There's the 200-day moving average, and it blasted from that. I'm not saying it's going down there, and I hope it doesn't, but it's probably going to get over to the 20, okay? And what is the 20 at? 561. That's $50 a share lower. At 200 shares, that's 10 grand. I don't want to lose 10 grand if it comes down to the 20-day and then bounces. I'd be happy to just wait it out. If it does break up and break above the 650, I'd be much happier buying at 660. This is what I don't think anybody grasps. You should be buying this at 660. Or waiting for it to come back and bounce the 20 at 560. Okay? Buying right now, you're just buying in the middle of a mini little downtrend. Like I'm saying, if they pop the stimulus, that's the move where it's going to move off of this. They pop the stimulus, this is going to fly. Okay? So the question is, if they don't pop it, guess where this is heading? Back down to the 20. If they pop the stimulus anytime, this is blasting. It's blasting, but it may still have resistance at 650, but still that would make a good point to go in and try to make $40, $50, $60 a share per share. If I got 200 shares of that, it'd be 12,000. So, I mean, think about it that way. As a trade, I would jump in that scenario. But right now, we are waiting. We are literally out of Tesla almost fully. Okay. We basically capped our gains on those, broke our record, tried to hit our 300, hit our goals, and we're sticking to that concept. So you have to have some sort of goal set of what you're trying to accomplish too, and not just get overly greedy and be like, well, but Tesla's going to go up to 1200. I know somebody, Bruce Burnsworth, he thinks that he's projecting 1200 by February. Now, my opinion, I think that's about a 1% chance of that happening. Okay, that's based on what I understand with the markets. He would totally disagree based on they're going to be producing more, their profits are going to be higher. That's fine. They could actually beat the goals and everything, and the stock could still come down. You know, the stimulus could stall, the vaccine could stall. We could have all kinds of macro issues that brings the whole market down. You cannot be so blindsided by just looking at Tesla and thinking, yeah, Tesla is a great company, but it doesn't rule the market. Okay, it doesn't control the market. The market controls Tesla. You have to understand that. That's critical. By the end of the year, you're going to see a lot of profit taking and selling off. I'm almost positive. I've done the research on years and years and years to see when people take the profits, you know, and how, when it dips down, you know, how far it dips down, and then if people buy back in the beginning year, such, you know. So I've done a lot of research on that. I've seen that the majority of the time, meaning higher percentage of the time, people are actually selling off before the end of the year, closing out. These big companies are closing out the accounts. So I highly doubt on the 26th, 25th, whatever, I'm going to have any shares running. It'll probably be virtually nothing, maybe like 5%, you know, maybe 10 or 20,000 worth of stock, but that'll be about it. Why? Because I'm betting on the percentages, the probability of something, of a possible outcome. I played poker online for 5 years straight, and my percentage, my ROI was monstrous. You know, 210%, 110%, depending on the game I was playing. And this was constantly. And I realized how I was doing it, and I was doing it basically mathematically by making the right moves profitability-wise. So the key, if you guys have to think about it this way, is try to put a probability of something to happen in your head. Okay, I'm very bullish on Tesla. That doesn't mean I'm bullish today in the short term on Tesla. You know, if I was super bullish right now, we would be in multiple hundreds of Tesla shares. We already did that when it broke out. Why am I trying to do it up here? We already did it down here. I've been waiting for that move. Boom, jump it. Now you have to take the profits at some point. Now, like I said, if you're a long-term investor and you're just holding Tesla for till 2030, you don't even need to watch this video. I already give you my approval. Hold it for 10 years. Go for it. Because this stock is going to be worth more. You know, it's going to easily be worth $2,500 to $5,000 a share by 2030. Okay? But if you want to make money consistently every single year, you cannot just buy and hold, because you will have years, months and years that you're down. We've had like 2 or 3 months of this year that we were down. 2 or 3 months that we were actually down. Yet we're still up over 100% for the year. You know? So think about it that way. So if you have to strike while the iron's hot. Okay? Like I said, get on the train, ride the train up, and then exit. You don't have to totally get off. But I mean, once again, I mean, we leave a lot of shares sometimes running. But when I see weakness in the market at all, I am bailing. I'm not waiting for massive confirmation of a crash where the market comes down 1,000 points and then you're stuck. I've been stuck once this year in a downfall once. And luckily I didn't panic in the situation. I evaluated and I said, okay, well, are we going to be higher, you know, based on the charts? Are we going to fall apart on the market? And it didn't look like we were falling apart. So I didn't have any bearish confirmation. And so I didn't panic and blow off, you know, tens of thousands of dollars on panic. So I don't panic. So that's another thing. Just don't panic on your situation. Okay. So I hope this has been helpful today. I wanted to go over, once again, mainly Tesla, but the market as a whole. Okay. Market shot up. I mean, think about it. Goldman Sachs wants the market up to 370 by the end of the year. Well, we get the stimulus, pumps it up to 370 or 375. I can see it coming up. Think about it this way. What's a possibility of happening? Let's extend this. This is SPY. Let's extend this to the end of the year. Let's just play a guessing game. This is fun. Okay, again, think about it this way. What's the probability of something happening? First of all, we need the stimulus to move higher, in my opinion. Okay, you can see the SPY bounce right off of it too. Look at the SPY bounce to 20. Told you. Tesla might have to bounce off the 22. I don't know. Anyway, so let's say we get the stimulus passed. Let's say it passes on Sunday night. Okay, we blast off all the way to 375. 2 weeks straight or so, or whatever. We blast off this way. What's going to happen down here? Everybody snaps their profits. It comes back down to 370. Okay, I'm going to leave these arrows on here, even though this is probably inaccurate. Let me stretch this really quick. Let me stretch this. So, yeah, let me do this really quick. Okay, exit drawing mode. Let's do this. Let's say it comes up to about, that puts it right on 373. That's crazy, which is right on the top of on the uptrend. That's like perfect. Think about it this way. What's the probability this keeps heading up and then we sell off, or it takes kind of a dive back down to 370? So there's the sell-off at the end of the year. There's the stimulus pump, the sell-off at the end of the year, and then people buy back in. So if you knew, let's say that happened. Let's say it happened exactly the way I'm saying it. What would you do as a trader or investor in this situation? The stimulus hits, you fly it up there, and you evacuate when it gets near 372, 375. Okay? So that's what I would do, and then dump it out. So we're not taking the hit all the way back down to 375 to 370. So, and whatever stocks are going to come down, it's not just the S&P, it's not just SPY. The whole market's going to sell off potentially. Now, here's a possibility. Oh, we get the stimulus and we blast off to 380 and then continue to go up. What's the probability that we end up at 400 by the end of the year? Virtually non-existent. So play your percentages. What's the probability of something happen? What's another thing that can happen? Well, we don't get the stimulus until whenever, the 21st or the 20th. Okay, which is almost too late. The 18th, let's say. A little too late for Christmas, right? And then we blast off. So there's our two options, in my opinion. Okay? And this isn't obviously directly up or down. Okay? I'm just saying, let's say it stalls. Now we head down to 360. What's going on at 360? A huge test at 360, 358. We talked about that in the last video. There it is, right here. 359.06. Okay, that's a huge test right there on that level. So if we head down there, no stimulus passes, and then it finally passes on the 17th or 18th or whatever, then we should get a boost into the end of the year. And I don't think we'll get a sell-off at that point. I don't think that people will be de-risking or potentially just a minor little sell-off in the last 2 days. Okay? Those to me are the two possible scenarios. But the stimulus is everything in both of the scenarios. Okay? So that's just my opinion. Maybe I'm crazy. Maybe I'm way off. Put it in the comments. You know, am I completely crazy, or does this make sense? Okay? Does this add up? Do you see the possibilities here? What's the likelihood of these things happening? You know? So I'm just betting on the likelihood. Instead of being in right now, why not wait until we know where this arrow is going? So if we get the stimulus, the arrow's going up. It just is. If we don't get the stimulus, you think we're still going up? Possibly. We could go sideways. Possibly. But the likelihood is that we have a negative reaction to it and we head down. You know, I'm not saying we're not going to get the stimulus, or we are. I'm just saying that's how you can play this scenario. Okay? I mean, I'm hoping that it passes, and then we get the ramp up, and then I can just cut off the positions at about the 25th, 4th, 5th, whatever, depending on how the chart's looking, and if we're still I mean, if we're still making money every single day and if the market keeps cranking up every day, there's no reason to sell. Okay? There's only reason to sell when you see weaknesses. Okay? This showed some weakness right here in the market the other day because everything got smashed. So I was like, the bar, pretty big, but not a massive bar by any means, but it's still weakness. Okay? And you can see we're still kind of a little bit of that weakness in the last 2 days. So obviously Wednesday, Thursday, and Friday, we get a lot of economic data too. Anyway, I'm going to cut it at that. So make sure you subscribe. Hit the bell notification if you want to be updated. I update you when I see major scenarios in the markets, when I see certain stocks taken off. I told you a lot of our positions and what we're planning on doing in 2021. And anyway, if you liked it, smash the like, and we will see you later. See ya.